can't tell you how many families I meet with who have juniors and have put their head in the sand and they say, well, I have a smart kid, so the government's going to help me pay for it, or they're going to get financial aid. And no, that's not what's going to happen. In some instances, you can get help, but we should be having these conversations with our kids, certainly in the 9th grade, if not, starting to talk about money. And I mean, money is something we need to talk about all the time with our kids when they're 5 years old at the grocery store and we're talking about buying a candy bar to a $150,000 college education.
All right, super excited. Welcome back to Wealth Webinar. Today is quite an honor to have Monica on. We met in Indianapolis and I did a talk out there and she started talking about what she does, and she's a CFP, Certified Financial Planner, which is, look it up, it's a very difficult designation. I got that right, Monica, right? Not CFA, yeah. CFP. Yeah, very difficult designation to get, one I always wanted when I was an advisor, but she doesn't do what a traditional CFP would do. She focuses on college planning. Now, I want all of you to think about this. If you have kids, like your whole time you've had kids, people have been in your ear about saving for college, right? Making sure your kids can go to the school that they want. And there's been various things that have been thrown at you for this. Oh, well, let's do a 529. Let's do a Coverdell educational, plan. There's all these different things that have been thrown at you. And I know when I was an advisor, I sold a lot of 529s reluctantly. I had no idea. I just did what I was told. And looking back, I sometimes think of how much damage I actually did. Now, maybe I got them off to a decent start with 529s, but if I only knew back then what I know now about the infinite banking concept, especially designed whole life, and being able to use that as a mechanism to save for college. Because listen, like one of the problems with a 529, and I'll hit this one right on the head, is what happens if your kid doesn't want to go to school? What if they want to be a professional athlete? What if they start a business that takes off? What if they just go a different path than what you want? Are you going to tell the kid, listen, little Vivi, like me and mom have been saving money a long time for you. You are not going to blow this. You are going to go to school, whether you like it or not. Is that really what you want to do? Because a lot of parents do that. Our kids should be left to follow their dreams. We should be able to support them, have the money saved so that we can help fund whatever it is. My mom put her house on the line as collateral so that I could start my first company at 17 years old, my clothing lines. Like that wasn't college. College couldn't have prepared me for that. But what if, she didn't have the house? Like that's the thing we got to think about. Like our kids are not us. Their dreams are not our dreams. Their path might not be our path, but we should always let them dream. We should give them whatever they need to a certain extent so that they can follow their dreams, maybe put bumpers in there and guide rails so that they don't get off into the deep end. But a 529 basically says, kid, you're going to college, you're going to like it. And in some families even go, you're going to be a doctor, whether you like it or not. Why? Because they're doctors and their parents were doctors and their parents were doctors. Sorry, maybe I'm out of line here, but that's not the life I live. It's not how I've gotten where I am. And that's not how I would want my children or child to have to live, at that point. And a 529 really does cap you. So I wanted to bring Monica on because she is an expert in this space, college planning. And there's a lot more that I just missed there, but we need to sometimes just open our horizons, set our sails and let them take us where we're supposed to go instead of just going where everybody else tells us we have to go. So Monica, with that being said, I'm going to make you the host here and I'm going to let you take over and do what you do.
Well, first off, Chris, thank you so much for allowing me to come on and share something so near and dear to my heart, which is college planning. I mean, it's I've been for 15 years now. I've been a college planning expert. I've been helping families save and pay for college so they don't sacrifice their own retirement. And Chris, you're absolutely right. Families are told that, there's a lot of misinformation, as we know, in the financial world and downright lies. And the one thing is parents are told, well, you're going to get help, right? There's lots of financial aid if you're paying for college. And then if you are going to have to pay for college, use the 529. So like Chris, I pursue alternative strategies to create wealth in a tax favorable environment where there's no risk, where you can leave a legacy And we call that infinite banking. And I just use infinite banking to help my families pay for college. So I'm going to share about a 15-minute presentation that I put together to help you truly understand what is the real cost of college, what is financial aid, and what does this alternative strategy look like. So we'll go ahead and get started. And Chris, if any questions come in, just stop me, let me know, and we can address those along the way. So as I talked about, this is really what I help families understand is this true cost of college. And the cost is very different than the expense. And I'll cover that a little bit more. What is financial aid? And then we'll look at infinite banking, and I'll actually compare that to a 529. So the first thing we have to understand is college is so expensive. So the term is called cost of attendance. That's the sticker price. And if you're looking at an in-state 4-year public education, it's $32,500 a year. If you want to go out of state or go to a smaller private school, now we're at $60,000 a year. And if you're looking at those very prestigious Ivy League elite schools, we're up at $85,000 a year. Now, the cost of college has been inflating at a significant rate. When the government got involved in helping students afford college, that was 1972. That was the creation of Fannie Mae. That's the loan program that the government put forth to help kids pay for college. Since then, we've had a 1,400% increase in the cost of college, which is 3 times the rate of inflation. So anytime the government gets involved to solve a problem that they've created, I'm always hugely suspect. So when families find out how expensive college is, they start looking for financial aid. Who's going to help me pay this bill? There's 2 types of financial aid. There's merit aid, and that's based on your students' academics. And then there's need-based financial aid, which is based on mom and dad's economics. Now, merit awards, that means your student must be smart. They must be a scholar to get merit aid, because that's the money the schools use to entice parents to send their kids to that college. There is no merit awards for very prestigious schools. All the schools that your kids want to go to, so does every other kid. So there's really no merit money. Almost all financial aid is based on mom and dad's economics. Do you need the money? So how is need determined? And that's what I'm going to help you understand. So need-based financial aid, you have to understand a term that's called student aid index. This is really a term, what the government says that you can afford to pay. It used to be called EFC, or expected family contribution, but they changed it to student aid index, and I'll cover that a little more in a minute. Well, the factors that are used to determine your need-based financial aid is mom and dad's assets and income, students' assets and income, parents' age, and number of people in the household. Now, a huge change that has happened since COVID is that parents are no longer given credit financially if they have multiple students in college at the same time. So this is important because the student aid index is calculated like this. So they're going to look at the parents' contribution, and they're going to assess your gross income at 20 to 30%. If you make $100,000 or less, they'll assess it at 20%. And if you make $200,000 or more, they'll assess it at 30%. And your income is your gross income. It's adjusted gross income, adding back any contributions you've made to pensions, 401k, IRAs, etc. But they're not done. Then they're going to look at your assets. And your assets are everything with the exception of money already in your retirement accounts, like a 401k, annuities, and cash value life insurance. Now, they'll also look at students' contribution as well. Now, if your student has a job at Starbucks, that's wonderful. It's really if your students are making more than $4,500 a year that it could lower your need-based financial aid. But what's more important is assets in your student's name is highly punitive. So if you are a family that's going to be eligible for need-based financial aid, you do not want assets in your student's name. Now, a 529, that is a parent asset. It is assessed at 6%, not the 20%. So just a quick example, I make $100,000 a year and I have $100,000 of visible assets. I will be expected to pay $25,000 to $30,000 per year per child to send them to college. This is super important because families are always saying, well, you know, I have debt, and it's just a huge misnomer because this is the process. Families will fill out a FAFSA, the free application for federal student aid, and what they'll get back is a student aid report. On that report will show what the family is expected to pay. And of course, the numbers are so high, it's mind-blowing, and families get angry. How on earth could I ever be expected to pay that much for college? I have a mortgage, I have car payments, I have debt. And the reality is they don't know you have debt and they don't care because it's not one of the factors they use to determine your aid eligibility. So having debt and paying for college, again, all they're looking at are mom and dad's assets and income, really. So here's how needs determined. Remember that sticker price, that cost of attendance, every school has one. Then you're going to subtract out that student aid index. That's how much you're expected to pay. And that will be the amount of financial aid you can get. That's the maximum amount of help that you can get. How do you get that need filled? You have to fill out the FAFSA. That's that free application for federal student aid. There's no cost to complete it, but there's 11 million that are filed annually, and you can fill it out October 1st of your student's senior year. Now, what's interesting about the FAFSA is even though I have a child going to school, college in 2022, they're actually looking 2 years prior at your financial information. So if I have a student going in 2022, they're going to look at my 2020 tax return. We call that prior. There's a very high audit rate on the FAFSA forms, and the audit is not coming from the IRS. It's the school that your student ultimately goes to, and we know there's lots of errors. So it's not that the FAFSA is hard to fill out. It's just you have to know what information to put where. Now, the school is who will ultimately meet your need. That's who determines how much help you get. And there's three possibilities. There's scholarship or grant money, which we love, right? That's our favorite kind because we don't have to pay it back. There's loans, which means you do have to pay it back, either student loans or parent loans. And then there's GAP. They don't have to do anything. Now, the FAFSA Simplification Act of 2021, this is where kind of the government re-swizzled the FAFSA, and they wanted to make it more simple. But in essence, what happened is the long and short of it is parents were not getting need met. So the schools were not helping families when they had need. So they changed the formula or what was called family or expected family contribution to student aid index because expected family contribution was very misleading. Families were having to pay significantly more, and you'll see in the example that I give. In the last 2 years, we've had COVID, an economic downturn, a war. All of these big endowment funds at these colleges are now smaller. Budgets are smaller. So there's very little money out there to help families. If you make $60,000 or less, You can get help from colleges, some. But if you make more than $60,000 a year, you will be expected to pay for college. And this is just, it's the very sad truth. I don't know when this happened, but families are expected to pay. This is a family responsibility, not a government responsibility to educate your kids in college. So let me just run through a quick example. So here is a family of 4. Mom and dad are 40 years old. They have 2 students. They have an 11th grader and a 6th grader, and they make $150,000, both of them combined gross income. And they have about $50,000 in visible assets in a checking account, in a brokerage account, etc. This family is expected to pay, as determined by the FAFSA, $36,000 a year per child. College is not 1 year, right? It's 4 years, and this family has 2 kids. So if we look at their 11th grader, Sam, college is inflating at 3% every year. By the time he goes to school, the 4-year education will be about $140,000. And their 6th grader, after inflation, will be $160,000, or a total of $300,000 is what they'll be expected to pay for college for their kids. I know we have to take a huge deep breath. Remember, this is kind of what a mortgage would look like. A mortgage we can finance for 30 years, college we have to pay for in 4. This family would need to be saving approximately $30,000 a year for 10 years to have a bucket of money big enough to pay this expense. Traditional financial planning says, okay, if you're going to save for college, then go ahead and put that in a 529 plan. Remember, a 529 plan is a government savings program with rules and regulations, all that go with it. And remember, we should always be suspect of any program that the government creates to solve the problem that they created. The high cost of college is because of government intervention. So a 529 is used to solve that problem. Now, you are 100% at market risk. Your 529 money must be invested in the stock market. And as we know, the market goes up, but the market goes down. We're recording this in 2022 and the stock market's down 30%. It is a visible asset on the FAFSA. So a 529 plan will reduce your need-based financial aid. And as Chris alluded to earlier, it must be used for college. If you don't use it for traditional 4-year college education, the government will charge you a 10% penalty. Now, I teach an alternative strategy. I teach the infinite banking strategy. And the vehicle that we use is a properly structured dividend-paying whole life insurance contract where there is no market risk. The whole life is guaranteed to grow at 5 to 6%, compounding every single year uninterrupted. It is not a visible asset on the FAFSA. It's completely invisible, so it will not reduce your need-based financial aid. It's liquid. I can use the money for anything. I can use it for college. I could use it for a trade school. I could use it to start a business, go on vacation, and ultimately fund my retirement. It grows tax-free, and distributions are tax-free, invisible to the government. And of course, there is a death benefit. It protects my family along the way in case the unthinkable happens. So I always like to compare a 529, which is what everyone's saying you should do, or what I call the wealth builder or the infinite banking strategy. So remember, the family would have to save about $30,000 a year. So they're doing it with the 529 strategy and the infinite banking strategy. College is $300,000. That's not changing, unfortunately. Well, after I'm done paying for college, my 529 investment is zero. I have no money left over. My whole life insurance contract still has about $50,000 in it, and I have a death benefit. I've been protecting my family for the last 10 years. Now, if this family continues to save for their retirement, which of course everyone says they'll do, as soon as I get the kids through college, I'm really going to start saving for my retirement. You'll see 25 years later, if they continued to save in an investment account, they would have about $450,000. Now, please understand, that number comes from the market returning a 5% rate of return every single year for 25 years with no loss. And when has the market ever had no loss? Your infinite bank or your whole life policy, it would have $750,000 of accessible cash, completely invisible to the government. And remember, there's no risk in this account. It's not based on the stock market. It's guaranteed to grow every single year. And also remember, there's a death benefit. So now I have a $1.2 million permanent death benefit that was protecting my family the last 25 years, but now that can be a legacy to leave to the people I love and care about the most. So using infinite banking, I'm able to recapture 100% of the cost I spent on college. I have $300,000 more in retirement. This is why I'm hugely passionate about paying for college. If you're going to pay for college, use the infinite banking system because we have so many more benefits than traditional financial planning. So this is what I do for a living, Chris, and I'm hugely passionate about it. And again, anyone who's interested or wants to have a discussion about it, I do offer a 1-hour free, no obligation consultation where we'll walk through your financial situation. I'll help you understand what you're expected to pay. And then I'll show you the infinite banking and how we build that strategy into your current wealth. So email me at monica@monicafelton.com. My website's monicafelton.com. I have my phone numbers here as well. And I just absolutely love the opportunity to help you make college so much more affordable.
I'm typing it in the chat right now. But the one thing too, folks, that you may or may not know, I know many of you are familiar with the infinite banking concept. We've never really hit it hard when it comes to, the college side. We've never really hit it hard in terms of the specifics about FAFSA and all the college planning, because to be quite honest, like since 2018, when I retired from Wall Street, I just don't pay attention anymore. I used to know all those numbers and everything because we used to sell 529s and that's what we used to sell them. Very rarely, well, actually, I don't think ever in all the years that I was an advisor, did we talk about using whole life as a mechanism to do this. It was always 529s, college savings plans, maybe mutual funds, because that's just what we did.
Right.
Well, the thing about Monica that I found interesting is, the first CFP, so extensive knowledge about all of this, but secondarily, a very deep knowledge into all the rules that come along with college planning. So, yes, the infinite banking concept and using that to help fund this, but also she's a wealth of knowledge in terms of how all this stuff works. You might be, a year out from school. You might already have kids going through school and you're just like not understanding it. They keep changing things. I mean, Monica, I got a lot of questions, and folks, if you have questions, put them in the Q&A right now. Let's really get some of these out. One of the things first thing that comes to my mind, and I hate to even be the one to bring this up, but a lot of people right now feel like they can rack up student loans and the government's just going to pay for them. I mean, what do you say about that? Because I mean, I know the answer to that, and we all, I think, logically do, but I mean, deep down, we're like, well, maybe the government will pay off all my student loans and none of this matters. I can just rack up student loans and the government's responsible, but that's not the case.
Well, the reality is so we're in an election year, and actually Biden did come out, I guess, a month ago and say that he was going to forgive student loan debt. If you're a married couple making $250,000 or less, he would wipe away $10,000 per person, or if you had a Pell Grant, he would wipe away $20,000 worth of student loan debt. Now, that's in the courts right now. I don't think as a president, you can just come out and say, I'm going to wipe away $600 billion of student loan debt and repurpose that onto the taxpayer. Oh, by the way, mechanic, hairdresser, nail salon owner, I know you never went to college, but you get to help pay all the student loan. So I do think it's a vote grab that's going on right now, but yeah, I mean, student loan debt is a huge problem. It's $2 trillion. It's what's owned right now in student loan debt. And it's really sickening what it's doing to our younger generation. I mean, they're coming out with debt. They can't afford to buy houses and cars and various things because they're just saddled with student loan debt. So college is not for everybody. And I have this conversation with so many of my parents. If you don't have an academic in high school, what makes you think you're going to have an academic in college? And Chris, I love what you said. Maybe a business owner, maybe they need to go to trade school. Maybe they need to do some different things, because a 4-year education is over $100,000 today. Imagine giving your kid $100,000 and helping them start a business. They're going to learn a lot more in that process, I guarantee you, than they would in a university, unless they're going into STEM, science, technology, engineering, or math. If you're going to do STEM, absolutely, you need to go to college. But history majors end up working at Starbucks with $130,000 of student loan debt.
I mean, the thing too, it's like, I love that you just kind of broke that down. What was it called? STEM?
Yes, STEM, science, technology, engineering, or math.
Science, technology. What about medical?
Well, I guess that would fall in science.
Okay, good point. So, we were just talking about this. I have a client, he's an attorney, and I just got into this because I looked at his student loans and I'm like, how did you rack up $350,000 in student loans? And just for the record, he's in his late 30s, folks. So he's been paying. Colleen just said, I just paid off all my student loans at 50. Did you say 55? Yeah, at 55. So here's the reality behind it. First off, colleges are not nonprofits. They're profit institutions. So let's just run the math on this poor attorney. What does an attorney make, out of college? I'm going to take a stab, 80 grand, 75 grand. And then they quickly get into the low 6 digits, and then they can climb wherever they want from there. But you rack up 350 grand in debt. Okay. You come out of school, you're making less than 100,000. Now that's gross, folks. Like, I loved how you said, like, all the basis, everything they do for these FAFSA forms, gross. Right. That doesn't account for your mortgage that just went up in cost. That doesn't account for your car payments, your health insurance, all the things at the net.
Or taxes, which are taking away 35%.
All those things, when it whittles down, like, there isn't 30% left for most people, folks. Most people would be happy with 10 to 15% left over after all of that. So now this person's making 100 grand. They've got 350,000 in debt. Yes, they can defer it. And a lot of people are just on this crazy thing right now. All my student loans are deferred. And I've even gotten used to not even talking about it because, it's deferred, but that's all coming to an end.
Yes.
These payments are like $800, sometimes $1,200 a month. Like, folks, I'm sorry, like, Americans can't afford that right now. Inflation's 8.3. Everything just went up in cost, and it will continue to keep going up with what the Fed's doing. And now all of a sudden, now their student loan debts come on, which they haven't had for what's been 3 years now. Like, how is this all going to pencil, folks? It's not. So how can you justify, like, even in a profession where you do need to go to school, like, how does that pencil? Like, use Harvard Law. What does Harvard Law cost? I know everybody wants to go to Harvard Law, like it's the premier law school, and I'm sure you'd have a better career after that. But still, like, you're going to spend what, 300 to 500 grand going to Harvard if you don't get some type of student, financial aid or something. Like, how many years of your life is it going to take you just to pay back what you learned to get in that position? Now, some people would say, well, it's still worth it in the long run. Yeah, maybe. Depends on how you look at it. I like what you said, like trade schools. Like, I'll tell you something. I know roofers and carpenters making more than any attorneys unless they own their own practice. Like, folks, this is a paradigm shift. We need to start thinking differently. And like, the traditional financial models, freaking broken. Well,
and Chris, I think there's so much pressure out there right now too. I meet with parents, and if you're a middle-class family, you are expected to help your kids, if not pay for college. I mean, if you say, look, I'm not helping my kids with college, I mean, you might as well say you're a child molester. I mean, it's just terrible, the expectations that have been placed on middle-class families. And if you look at my example, a family making $150,000 after taxes, they're bringing home what, 120,000, that's $10,000 a month of after tax money. They have to pay a mortgage, they have to eat, they have to electricity, you start adding all that up, and there isn't $3,000 a month left over to pay for college. So, how do we re-swizzle this? How do we look at it differently? And, I think the sooner families understand this, and this is my mantra for 15 years, has been, you need to understand what it's going to cost and have those conversations early. Community college is one of the best values we have going right now. You can do 2 years of community college and then 2 years of a 4-year education and basically cut the cost in half. So really talking about, because money will be one of the deciding factors. It might not be number one, but it's certainly in the top 3 of where your kids go to college. And right now, almost every middle-class family is talking about, how do I afford this expense? And by the way, if this loan forgiveness does go through, basically the statistics show that for every $1 of forgiveness that happens for college, it increases tuition by 60 cents. So what's going to happen is we're going to forgive all this loan debt here, and the cost of college is going to go up 60%.
Well, Monica, on that, Drew just said, so one of our folks that are on here, Drew said, colleges have raised tuitions on average 13% year over year for the last 2 decades. Like inflation's 8.3, colleges are going up by 13%. I didn't know that. That's
exactly
crazy.
Right. Yeah, no, it's shocking, the inflation. But again, it's no different than the housing market, right? The housing market, when money is cheap, what happens to the cost of houses? It skyrockets, right? Because people can afford more. College is exactly the same thing. You start giving families money to help pay for college, and the colleges say, oh, wait a minute, I can increase the cost of college by exactly what the government's giving. It is the same concept.
I got a question here from Morgan. She said, I have 2 sons that are dealing with college loan debt now. One is a medical professional, and I want to help them with IBC to pay or to help repay their loans. I don't know if that's more of a statement. Do you want to answer that?
Absolutely. So obviously, ideally, we'd love to implement IBC before school happens, right? But the reality is we can't change the past. So implementing an infinite bank to help basically recapture or repurpose those debt dollars through the whole life policy. In essence, we use our whole life to take over the debt, bring that external debt internal, right? So now we own that debt. And then in essence, we're paying for that ourselves. So it's exactly what Chris teaches in all of his webinars about taking over outside debt, bringing it into the whole life policy where we own it, but we benefit from the interest off the debt, not the outside companies, banks, etc.
Colleen said Harvard Law year 1 is 70,430. Tufts Medical is over 90,000. Folks, are any of you doctors? Like, I know doctors, when they get into a specialty, but like a physician, what does a physician make nowadays? 200? Kind of top.
I think that's being generous right now. The medical industry, hospitals are now buying, they're basically employing all the doctors. So I think the days of a GP making $80,000 or $800,000 are over. I mean, GPs make anywhere between $125,000 to $250,000, but no one's paying for their debt, right? So they have $300,000 in student loan debt, and they're making $150,000, $200,000 a year.
That was a culture shock for me growing up. Doctors to me were the ultimate, doctors and attorneys growing up, I was like, they're so rich. And then like now, like when I was an advisor and even more now, like I see what they actually make. And I'm like, how do you do it? Like you got all this student loan debt, like high overhead and everything else, some of the most liability that you can ever get in any industry.
Oh, without
And that's,
question.
and you just keep getting pinched and pinched and pinched. It's just, it's sad. It's
Yeah.
sad. And like right now, like Jill was saying, plumbing isn't sexy to younger folks, but plumbers make stupid money. Our plumber that does our real estate flips and everything else, Jesse, just a normal everyday guy. I'll guarantee you, he makes high 200s to low 300s, and he's not running any extravagant, crazy business. I'll guarantee you that he makes that. And he's got just a few guys, like they just roll around in basic vehicles. Like doctors aren't making that. Maybe specialists, but not doctors. So
Right.
I just think it's just a weird shift, and it's going to be a scary shift, because if it keeps going like this, there's going to be more and more people that don't want to be doctors. And then we're going to have a huge hole like we do today in carpenters and trades. We're going to have that same hole in medical.
And we already are at a medical, I mean, we don't have enough medical professions. Remember, we have 10,000 baby boomers retiring every single day, hopping onto the system. They're getting older. They need more health care. You're right, Chris. We have to figure out a way to make, medical school more affordable. But right now we have to be able to control what we can control. And what you and I teach is, if you're going to have to pay for something, there's a better way. Cycle the money through the whole life policy first. That's your foundation. And then we pay our expenses. Then we invest in the market. Then we buy our real estate. But your whole life is your foundation, where all your money should be deposited first.
Shauna said she had a friend that's a nurse, and she didn't get the $10,000 because she had a different type of loan. As it was said, and I remember watching Biden do his speech about that, made it sound like everybody, in that income range was going to get 10 grand off of their student loan. But then there's always the red tape. It's just like, if I went out and I started just saying whatever I wanted to say just to make everybody happy, I'd be sued. I'd be in arbitration case. I'd probably be in jail. But yet the politicians can just say whatever they want to get more votes, and people believe it until then they can't. But then it doesn't matter because it's already out. It pisses me off. And I'm gonna just end it right at that. It pisses me off. The model of the trade schools, if that could be more of a foundational piece for colleges, where we do a better job of finding out what our kids might want to do, and then we figure out how to apply that in a real life scenario, instead of just sitting them in a class, teaching them a bunch of stuff, which might be great information, but it's useless information if the kids aren't going to apply it. And unfortunately, that's the model in college nowadays.
Yeah, well, remember, we used to have shop. We used to have in high school, there used to be courses to, auto mechanic, whittling. There used to be opportunities for students to learn other things. Now we barely teach math, so I mean, public education is in trouble. I mean, it really is. And the reason everyone feels like they have to go to college is because, in my opinion, we're not teaching what we used to teach in high school. Kids are coming out of high school barely able to read. So now, to have any level of education, people are assuming that if you go to college, well, then you probably know how to read after you go to college. So, my heart goes out. My youngest, I just sent her off to college. So we're kind of through all that process, but I think it's a very challenging time for young families with young children, trying to figure out what makes the best sense educationally for them, and then how to pay for it.
Just all this talk about like our kids and like school and everything almost brings tears to my eyes, because I don't know, I just grew up in a different time, and I'm sure all of you did too. But then I think back to this like talk that I'm doing, this letter, just there to serve my daughter, and everything I'm reading in these comments, it's insane. Like my TEDx talk, in very short way, because it's only 17 minutes, hits on all these things. And God, I hope it does more than just put my daughter on a good path. I hope it really changes the way a lot of kids do things and parents do things, because it really starts with us, because knowledge is passed down generation to generation. So it starts with us to teach these things. And if we just teach our kids what we learned, we're teaching them broken knowledge, because what we've learned might not be true or not. We don't know. We're passing it down like it's the gospel. It might not be. And we need to just really look at this. And education is where it all starts. I'm just reading all these comments. It's insane. There's so many opportunities. Like, think of being a kid in today's world. Like, I'm older, so this is the way I think, folks. And I just want to know how you all think. Like, look at the opportunity right now for kids. Like
Mm,
I think it's one of the biggest opportunities of any generation that I know of, because it doesn't matter. Like, all you need to do is go out there and actually try and work and really put the effort in. Like, nobody wants to work. So
right.
like, I'm like airline pilots, right? Like, how cool would that be? And like, maybe I'm weird in this, but like, I think a cool job would be being a pilot, flying one of those airplanes every day, seeing the most beautiful sunrises and sunsets. They make, I don't know, what do pilots make? 200 plus? I know they're paying even more now because there's not enough of them.
Right.
Technicians on planes and all these things. And you don't need college for any of those folks. Go to the Air Force. Like, they'll teach you all of that. Like, go to a trade school. That's what you do. Like, you don't need college. And those people are making more money than most of the people that go to college to learn something. Listen, I
Right.
think if you're going to go to college, go for the gusto. Plan for your kids to go to an Ivy League school, not for the knowledge, but for the network, for the
Mm.
community. That's the thing I think you get out of it. I mean, I could be broken there, but like, I have a really hard time with today's education system.
Well, and I think, Chris, what we're trying to help people understand is obviously whatever families want to do that they think is best for their family, wonderful, you should do that. But let's start planning for it. Hope is not a strategy, right? I think it's a wonderful way to live, but we need to start planning. No one's talking about, I think, I can't tell you how many families I meet with who have juniors and have put their head in the sand and they say, well, I have a smart kid, so the government's going to help me pay for it, or they're going to get financial aid. And no, that's not what's going to happen. In some instances, you can get help, but we should be having these conversations with our kids, certainly in the ninth grade, if not, starting to talk about money. And I mean, money is something we need to talk about all the time with our kids when they're 5 years old at the grocery store and we're talking about buying a candy bar to $150,000 college education. Sitting down with your kids and saying, and I've done this on numerous occasions, I've done an amortization scale on $150,000 for 10 years to show a kid, okay, you're going to get a degree in history. You're probably going to make $35,000, $45,000 if you're a teacher. So break that down into monthly, let's say $3,800 a month, and you have $1,500 of student loan debt. That doesn't, and you also need to pay rent for car payment, put gas in your car, food. Does that make sense? Right? So these are the types of conversations kids need to be having, because unfortunately at 8, and my kids are no different. Yeah, I'm in financial planning, and I sit down and my daughter will say, Mom, can I have $100 for? And I'm like, whoa, how many hours do you have to work to make $100? And she's like, oh, okay, yeah, let me walk through that process. Because today, I don't think people are asking good questions, good financial questions. And I think that is a real travesty.
Well, Monica, this has been awesome. I appreciate you being on and
Thank you.
kind of doing this, folks. I urge you. We put that that chat or that contact information. I'll put it in there again. Make sure you book a call and set
Thank
up a
you.
time to go over. If you've got kids or you need help with college and you want to help structure, what she was talking about. Please book a call. It's just, we all could use some help in this level because it's just so I mean, even for me, it's complicated. The whole FAFSA thing and the navigating your way through that. It's almost an art form. Hell, you need to go to college just to learn how to fill the damn FAFSA out, for
Well, I
crying out
always
loud.
say, I say to families all the time, you'll you send maybe 1, 2, or 3 kids to college. I basically send a kid to college, 4 or 5 times a week. So, I'm doing the FAFSA, all this college planning. This is my passion. This is what I love, helping families be successful with the things they care about the most, which is usually our kids.
Yeah, I agree. Well, I appreciate your time on, and we're going to kind of
Thanks,
keep
Chris.
rolling through on this same topic. So we'll see you soon and let us know how we can be of service.
All right. Thank you.
Thank you. All right, folks, lots of really unbelievable information there in regards to college planning. And, I love your questions coming in, and, we got all sorts of different stuff coming in with Obama and everything else. Actually, I want to do something, and maybe we'll have time. Actually, we will have time. Just yesterday, and myself, Shauna, and Andrew are the only ones that actually have seen this yet. And, I don't know how to say this in the right way. we make these videos for YouTube all the time, and, we sort of just go off on them and have fun with them. But I made this, we recorded this video, I think it was last week, and it'll be up on YouTube here soon. But I don't think I've ever watched one of my own videos and laughed so freaking hard that literally I had to like go back and rewatch it. Like, it feels stupid because it's my video that I'm watching and I'm laughing. People are like, well, duh, it's your video, you should have known. No, it literally was completely different. So if I can, I'm just going to share this, and I want you guys to get a little bit of a laugh. It might be a bit long, but trust me, the punchline's worth it. So stay with me. It's here. The time is now.
What?
You're far too trusty.
That's right. Everything's actually starting to fall apart. Don't say that you weren't warned. Don't say that we didn't tell you this. We've been warning you for the better part of over a year that this was going to happen. And now people are actually surprised.
Oh my God, the markets continue to go down. When are they going to go back up?
They're not. For a long time. Because you have to understand the market. You have to understand how they work, why this is happening, what events are creating this. This isn't the first time this has happened. This is literally history repeating itself. But you've already known that and you've already heard that. The problem was you let your emotions get involved, right? You let that FOMO and you let everybody else get in your head. It's time to change that. My name's Chris Naugle. This is What Now, What's Next. All right, so now it's happening. It's happening. The markets are going down. We had a 500-point drop just the other day, keeps going down. But every once in a while, you get that little update, and people are like, oh my God, it's coming. It's going to go back up. It's not. It's not. This happens every other time. You should really study the late summer of 1929 if you want to see what's going to happen next. But actually, if you know anything or remember anything from high school, you would remember what happened. That's right, the Great Depression happened. Oh, but this time's going to be different. Well, maybe, but probably not. The only maybe in there is that the government and the Fed love to print money. Under modern monetary theory of economics, that's what they do. When there's hard times, when things are rough, they print money. But here's why I call your bluff. If you think the government's going to save you, you're probably the person that thinks the Fed is actually the government, right? You think the Fed and the government are the same thing? Okay, well, if you're that person, let's just pause. Go back and watch some of my earlier videos, and you should probably subscribe to this channel because we would have already taught you that. Shameless. You see, the Fed has waged all-out war. If you've been watching the news, you've seen that the Fed is now destroying the markets and destroying the economy by doing two things that are in their full power to do, and that is raise interest rates and unwind their balance sheets, sell off their bonds, mature their bonds in the open market. Now, what do these two things do? Well, one, raising interest rates, I think you already know, don't you? Go try to buy a house right now. What is your 30-year mortgage? That's right, probably in the mid-6s. Where was it last year? Less than half of that. So that's what it does. If you've tried to buy a car lately, oh yeah, that's right, used car rates are way up. How about credit cards? Oh, they've ticked up too. Lines of credit? Yep. You got a home equity line of credit? Yep, that got more expensive. You see, everything gets more expensive. And I'm not talking about inflation, okay? I'm talking about the Fed raising your interest rates. Because when they do that, it makes things more expensive. They're trying to get you to stop buying things. I can't understand why people can't see what they're trying to do. You're spending too much money. You're buying too much shit. Stop. Hell, the bank is trying to help you not spend as much money because the bank isn't even paying you any interest on the money that you're leaving there. You didn't even ask questions about that because, hey, the Fed's raising interest rates. Your 30-year mortgage got more expensive. Everything got more expensive because they raised the rates. But I think they forgot something. You should actually send them a letter and be like, hey, Fed, yeah. Hey, I'm just wondering, you're raising the interest rates on everything. Can you just raise the interest rates on my savings account? And maybe give me a couple interest rate points on my checking account. That'd be great because you guys are using my money and you're making money on my money, but you're not giving me any. You know why? They don't need your money anymore. They don't want your money anymore. They'll make you think they want your money, but the Fed doesn't want banks lending money out right now because that'll make you go out and spend more money. You want that new car, that new boat. Heck, maybe you're buying that new plane before the 179 deduction ends. The banks are going to make it really difficult for you to get a mortgage, for you to get a loan right now because they don't want to lend money. And they don't want to pay you anything on your interest rate because they don't care if you put more money there. This is a unique time.
but it's one you should really pay attention to, because until the Fed wins this war, oh, by the way, they started the war too, right? They printed 5.1 trillion, over 10 trillion since 2008, which then just put a whole bunch of money in the system, gave you a bunch of stimulus checks, a bunch of PPP loans, a bunch of EDIL loans, and you went out there and you did what with that? You spent money. You enjoyed things. You bought assets. Good, I'm not saying there's anything wrong with that. But you created a little bit of a problem. Actually, the Fed created the problem. You just complied. Okay, you just conformed to what they told you to do.
Hey, here's some money. Go spend it, stimulate the economy.
And then the Fed was like,
Whoops, worked pretty good.
and the government's like,
Oh boy, it worked too good.
and then the Fed said,
Don't worry, everybody. We got this.
like they ripped the suit off, and there is the Superman, but it just says FED. That's right. We got this, guys.
Here's what we're going to do. We're not going to think that inflation is transitory. We're not going to get this wrong this time. What we're going to do is raise interest rates 7 times this year alone. And then we're going to start to unwind our $9 trillion balance sheet. We're going to sell off all those bonds that we bought. And by doing that, we're just going to suck all that money we printed back out.
It's kind of like this.
Oh, you need some money? Oh, here you go. Give me that back.
Yep. And you don't even see it happening. It happens
All right. I'm sorry, folks. I'm dying over here. I'm literally dying. All right. You guys can watch the rest on YouTube when it's, but that was the part, like, maybe I think it's funnier than you guys do, but what the hell? I had to show it. I just couldn't hold it any longer. So hopefully you guys enjoyed that little teaser. All right. So what I'd like to kind of do is I want to talk about some things, because there's some interesting things happening right now. We're going to shift off of the college planning, but it's all relative. And we're going to talk a little bit about money. We're going to talk a little bit about some cool things like, hey, you all want to raise? You guys all want to raise? You just got one. So as the Fed raises interest rates up, okay, the 7 times, whatever they're going to be, maybe they're going to go another 75 bips next time. Every time they do this, it makes everything more expensive. Cars, houses, loans, credit cards, all of these things, you know, we'll just do, you know, we'll put HELOC here just so that it's more relative than just loans. HELOC, all these things just got more expensive. So car loans, I think I just looked, they're about 6.5% right now for a used car loan. Houses, where, Stephen, do you know where the 30-year mortgage is right now? I know we just talked about it this morning.
It's 7.38 in Florida. It's right around that for the national too.
All right, so we'll just do 7.3. Anyone got a HELOC? Can anyone tell me what your HELOC is? I know my cash value line of credit's at 5.5, which kind of sucks. I think it's 5.5. So all these things going up and up and up. Liz, that's not hilarious that my cash value line of credit just went up from 3 to 5.5. I know you're just talking about the video. But anyway, like, let's just call HELOCs maybe 6%. I don't know. Somebody will give me it. Credit cards. I mean, they've never been cheap, but now they probably are 25% and up. Here's the things you're not going to see anymore. 0% car loans. Okay, good. I'm so sick of hearing about that, but I bought a car with a 0% car loan. Why would I use my infinite banking policy for that? Okay, don't. It still makes sense because you take back control of your money. But here, holy shit, 7.2. Missed the boat on that one. All right, 7.2%. So like all of this all looks like bad news, right? All of you are thinking, oh no, all those things just got more expensive. See, from this side, and for the side that most of you should be looking at, you should just be like, man, we just got a raise, because you know what? All of these interest rates are, that's what they're charging. So if you owned your own bank, why would you charge yourself anything less than what they're charging out there? So my new truck, the G63, I think I did a little better than this. I think it's 6.2%. Now, when I bought it, I had the money from the trade-in on the old car that was all from my banking policy. But when I bought it, I didn't have all the money available to fully pay cash for it. I had to actually take a loan. Killed me to do this, but I went through that process, found the cheapest one, Ally Bank, and I was waiting for one of my private loans to pay off. Well, it paid off. And just the other day, I paid that off. And you know what? I just increased my banking policy by the amount that they were charging me, which was like, I don't know, it was like $860, whatever. I mean, whatever yours is. But that's at like a 6.2% rate. Now, most people complain when cost goes up. I'm like, yeah, I just made $861 a month. And all I did is I shifted who that loan was. Now, if I were to lend money out, if houses right now cost 7.3, currently I've been lending money out on Private Money Club at 10 to 12%. Do you think I'm going to keep it at 10 to 12? Nope. You know, on Private Money Club, I've been seeing a bunch of first lien position deals be posted at 15%. You know why? It's because everything else just went up in cost. Hard money lenders increased. I was at the gym working out the other day. This is kind of funny. I'm at the gym working out and I'm just getting ready to do a set. And this guy walks up. I know he's a real estate investor and he says, so what are you running at these days? I just got done running on the treadmill and I'm like, I don't know, 6 miles an hour. And he's like, no. What are you lending out? Like, what are you lending at? Maybe I heard him wrong. I thought he said, what are you running at? And I'm like, why are you asking me what I'm running at? I'm embarrassed. What do you run at? 7? I'm only at 6, man, but I got a 2% incline. So I was embarrassed, but he was meaning lending. He's lending out at 13% plus 2 points. And I'm like, wow, I'm underpricing myself. But you see, the reason now I'm underpricing myself isn't because I'm not being, doing things right. It's because everything else around us is going up. So this, if you were to buy a house using your banking, well, then now you're charging yourself the same as what they would charge, 7.3. HELOC loans, 7.2, great. Now, what does that mean? If we lend that money out in Private Money Club or we do something with it, well, now that's the bar. 7.2 is our cost, okay, for using the money. So we got to charge more. So I don't know, I like the double effect. Start asking for 14%. Might be a little bit of a stretch now, but eventually it'll come around. Because if the Fed keeps doing this, guess what? This all becomes realistic. Credit cards. What do we teach? We teach you how to pay off your credit cards using the snowball effect and using the infinite banking concept. So if your credit cards used to be, 15% when rates were low, and now they're 25%, shit, you just got yourself a 25% raise when you pay them off. You see what I'm trying to say to you? Like, don't look at this as bad because the cost of everything's going on. When you own the bank, this is good. You just got yourself a raise. And you know what else is really good? So sorry, I'm getting kind of excited. I don't know if it was that video that got me fired up or because I haven't been on here in a while, but now here's another really, really cool thing. And I'm going to go, all right, so I got to do a disclaimer. So what I'm about to say is strictly my opinion, and it is not based on any factual data. This is not to be used or held against me in any court of law or arbitration, blah, blah, blah. This is my opinion based on past things that have happened in the past. I don't know. Can we have an attorney write me a disclaimer here real quick? Because I want to talk to you about something that I think is going to happen, but it's not happening now. Everybody understands this is just me giving you my opinion. Okay, sorry. I've been in this legal mode lately. Private Money Club's got me all in this legal thinking mode. So let's just use insurance companies. Big, boring, giant, mutually owned insurance companies. Yep, we got these insurance companies. So when we take out one of those stupid whole life, says Dave Ramsey, okay, what does the life insurance company promise us? Well, they promise us a percentage on our money, right? They promise an interest rate. They promise a death benefit. And then there's usually a term, okay? But for a whole life, it's your whole life. I think you all know that. So death benefit. Now, what do they not promise us? So let's put down here, this is not guaranteed, not promised. Dividends. Does anyone know what a dividend is made up of? Well, if you watch Dave Ramsey's video on YouTube that says the infinite banking concept is a scam, he makes this seem so bad. Dividend, insurance companies, that dividend, that's a big scam. All they're doing is they're paying you back your unused premiums that they didn't use. Dave, you're so smart. That's exactly what they're doing, Dave. All the premiums that went into that insurance company, whatever they didn't pay out, they're just going to give it back in the form of a dividend. Well, that's a terrible thing. They're just giving you back your money. Okay, if they're just giving me back my money in the form of a dividend, and they're giving me back everybody else's money that they didn't use, well, because that's just my money coming back, holy crap, that would mean that these dividends are tax-free. But Dave, you like those dividends from Apple and from I don't know, Alibaba or any of those other companies paying dividends, right? Those are the ones you like. Those are profits of the company. Yeah, right, exactly. They're profits. They're not a return of premiums unused. Yeah, guess what that makes them? Taxable, you son of a pup. They're taxed now because they're taxable. Taxable, if I can learn how to spell here. But these ones, because they're just returning the premium, are not. So let's talk about what we just went over a second ago. What do we know is happening right now? Interest rates are going up because the Fed has waged all-out war against the inflation that they created a few short years ago. All right, so here we go. If interest rates are going up, everything around us is going up. But because you're your own bank, you got a raise on almost every level. But you're going to get another raise here pretty soon. Again, my opinion only, no facts here, no basis. This may or may not happen. Dividends, from what I've seen in the past, have something to do with interest rate cycles. And I could show you a 30-year or 32-year cycle of dividends with one of the mutually owned insurance companies. And we can look at the year, like the 80s and the 90s, dividends were really high. But what else was really high in the 80s or 90s? Can anyone tell me? Anyone remember what was high? That's right, Morgan, interest rates. Interest rates were high. And what has happened since then? They have slowly ticked down. And then if you remember the dot-com crash, okay, that was in the 2000s when the dot-com crash, interest rates came down. We can correlate if we look and we can see dividends drop almost right there. Like the year after the dot-com crash started, the Fed dropped interest rates to stimulate the economy. That's what they do every time. And all of a sudden dividends went down. And then after, dividends ticked back up. Why? Because interest rates went back up. And then 2008, dividends dropped. But since 2008, the one thing that they haven't done is they haven't really raised interest rates a whole hell of a lot of anything. There was some movement, and I can show that. So all I'm doing is I'm looking at the past. I'm looking at events that happened in history, recessionary periods, good times, bad times, the ebbs and the flows of the market. So I'm looking at these, and I'm then comparing it back to interest rates, okay? And then I'm comparing it also to dividends. And what I found is that when interest rates are going down, dividends tend to go down. You know, with this company, we went from a dividend, so the dividends, when I say these, this is a dividend crediting rate. It's a dividend plus the guaranteed interest. So insurance companies take and they kind of blend the dividend and the interest rate. They call it a dividend crediting rate. So when they do that, just a few short years ago, this one company, I think we went 6.4 to 6.2 to 6% where we're at right now, okay? Those were the dividend crediting rates, the interest plus the dividend. So if this was where we were, because this was the lowest, 6% was the lowest interest rate cycle we were ever in. And now the Fed, with their games they're playing, they're raising interest rates up. Let's take off our emotional hat and let's put on our logical hat. What do you think is going to happen? Can anyone tell me? What do you think is going to happen? Interest rates are definitely going up. They just did 75 bips. I'd be willing to bet they're probably going to go another 75 bips next time. And who knows where they go the rest of it. But where do we think dividends were going to go? Because if interest rates go up, if we just look at the past and we look at where dividends were in the past, which were double digits, okay, so I'll just put 10% plus during like the late 90s and going into the dot-com crash, they were definitely there. And then now we're down at 6. So if interest rates go back up, what do you think is going to happen? All right, so I don't have to really think long and hard. I'm just going to put my logical hat on. I bet you any money, not guaranteeing this, not promising this, not saying I have any facts to prove this, but I'm just kind of betting instead of black or red, on the table. I'm betting these things are going to start going up. And if I look at the past, that's probably going to happen. So if those things go up, now all of a sudden, what also happens? Doesn't our spread go up? The amount we make in between what we earn and what we pay, as long as the interest rate doesn't raise their loan interest rate, even if they do a little bit, we're still going to go up and that's going to go up. So it's all things relative, but we got to raise here. So folks, like, here's where I get really excited. I get excited about making videos. I get excited about watching what the editors do. I get excited about a lot of things, but man, I get excited when we get raises. And I get excited when we get a raise and we didn't have to work harder. We didn't go have to kiss the boss's feet. We didn't have to do something miraculous or go in to sit through one of those, well, we're going to go through your performance thing, and we're going to look at all the things you did right or wrong to determine whether or not you're going to get a raise. And you're sitting there biting your nails and being nervous, and all of a sudden they're like, all right, we're going to give you a raise. Oh, yes, how much? 20 cents an hour. Woohoo! 20 cents an hour raise. Yes. I like getting raises here, because I don't have to kiss feet. I don't have to go through performance results or performance, whatever they call those things. It's been a long time since I've worked for somebody. I just like when everything goes up, that translates over to my bank making some more money. And then if I get lucky and this thing happens in the future, like it has happened in the past, I get a second raise. this is the best time in my entire life to be in the banking business. And Stephen, I'm sure, would say the same thing. I mean, look at his banking business has paid for a remodel of his studio, folks. Look at that thing.
I don't know if they can see me. I'll have to talk. I think it's on speaker mode. Looking better though, looking better. We're getting there. We need the lobster back, but we'll see.
Yeah, the lobster's got to make his way back there. But, you know, it's just like, I think about this all the time, you know, just about how this is the best time, because if we're looking at something at the all-time high point, like let's segue, folks. I'm just going off, and please put your questions in. Caleb he put a question in. Stephen, I want to get started. So Stephen, send him off the link. But let's talk a little bit about, the tale of two insurance products. So the markets, we've been in the longest bull run in history. So when the markets are up, brokerages and the insurance industry, not all the companies we deal with, but the other ones, you know, the other companies, they sell IULs because they're selling into an increasing stock market. Now, right now, we're in a declining market. So that all those IULs, just so everyone, you know, knows this, if you own an IUL, they did tell you there's a floor, right? You can't lose money, did they not? Guess what? You're losing money. You right now are losing money. Oh, but they told me I can't lose money. Right. You can't lose money because you're participating in an index's return. You don't even know what those indexes are. Me and Stephen just got the crash course in it. And holy shit, you don't even want to know what's in those things. But anyway, you're participating. So upside potential, if it's uncapped, it's uncapped, but most of them are 10, 12%. Downside loss protection, 0%. So you're at 0% right now because the stock market is down double digits. I don't care what market index you look at, double digits. So if you owned an IUL because somebody told you it was the greatest thing and you should have this IUL, you're losing money. Oh, no, I'm not. They told me there's a floor. I can't lose money. Did they tell you that there's a cost of insurance that goes up every year? Did they tell you that there's policy service fees? Did they tell you that there's other administrative fees inside there? Oh, they didn't. Well, you didn't read the contract? You didn't read the contract that said all those fees? No. But you think you're not losing money. Well, once you take 0 or 0.7, whatever your floor is, minus the cost of insurance, minus the policy service fees, minus everything else, you are losing money. I had someone so brilliant come to me and they said, well, I have an IUL and I think it's better than the whole life. Just the other day, folks, we are in October right now. This market has been going down all year. This isn't something new. And he says to me, yeah, or actually she says to me, I'm sorry. So this was at an event just a couple days ago that I was at. She was a financial advisor and she saw our booth. She saw me talk and she says, oh, I know all about these, but there's a better product than whole life. Oh yeah, do tell. She says, IULs. I said, well, yeah, but IULs aren't doing well. This isn't really the right environment to be buying. I'm trying to be nice. And she says, well, yeah, they are. Like now is the time to buy them because you're buying low. I just wanted to explode. Now, some of you do, does everybody know why? Everybody understands this, right? I'm buying low. So when the stock market's going down, you want to buy, right? This is where you want to start dollar cost averaging. You want to buy as the market goes down. We always talk about that. Buy low, sell high. An IUL, the most popular insurance product out there that we have to have fights with every week because people keep saying these are better than whole life. It's not better or worse. It's just there's a right need and a wrong need. This financial advisor told me that her IULs that she sells allow her clients to buy into the downward market. Now, if that were true, I'd be like, wow, that's not such a bad thing. That's actually probably not a bad thing to be taking your money in your IUL and buying low. But you see, I know better. You're not buying low. The IUL has a floor. Let's just use it at 0%. And if it's uncapped, probably a 10% ceiling, right? That's your range. This is what you participate. Keyword, participate. You're participating in the insurance company's gains. You are not owning the index. You are not owning stocks or securities. You are not owning anything. You're participating. Okay. When you participate in white rafting, okay, you go down one of the rivers in a white raft and you're participating. Do you own the raft? Do you own the river? No, you're participating. This financial advisor told me that in an IUL, she's buying lower. I had to. I just had to tell her, ma'am, in an IUL, you're not owning the stocks. You're not owning anything. You're not buying low in anything. You're just losing money, ma'am. What part of the training did you miss? Did you sleep through it? Do you even know what you're doing? Do you know that IULs can be sold by unlicensed security? Like it's not a security. So like somebody that knows nothing about the stock market, has no security licenses, can sell this product. Hell, me and Steven, I gave my licenses up. We were both financial advisors. We no longer have security licenses. We can sell IULs. But this advisor is telling people that they're buying low. I'm sorry to go long on this, but like, that's the shit going on out there, folks. Lies, lies, and more lies. And pretty soon that thing's going to blow up in people's face. Whole life, boring. But you know what it doesn't do? Ever go down. Nope, can't do anything because it's got a guaranteed interest rate. And well, I can't guarantee dividends, but they've paid them every single year that the insurance companies that we deal with have been around. Unreal. I lost some followers in there. I probably got boring, but let's get some questions. Like, does this excite you or not? Like, does getting a raise excite you, or is everybody still caught up in this whole like vortex of, oh my God, everything's getting so expensive, we're all screwed? Because this should be the biggest opportunity of your life, and that's how you should be looking at it. But I mean, come on, let's ask ourselves a serious question. How many of you are still in the stock market? And every time you get your statement, you're like, oh, I don't even want to look. I don't even want to look. Why are you still in? Like, honest question, asking for a friend. Like, why? I just sometimes can't understand it. Now, I know there's different people and there's different needs and goals. And if you're young, maybe it makes sense to be in the markets. Maybe it makes sense to keep buying into the downward market. I get it. I get it. But don't complain that you're losing money. If you're losing money, it's because you failed to launch. You failed to do what Warren Buffett has said for whoever. Dude's like 80 some years old. I don't know when he started saying it. Buy low, sell high, and don't lose money. How many of you, just by a show of hands, and you guys can give us an eye, how many of you are joining us for the Private Money Club launch? Any of you joining us for that? Because it's coming up soon. We're 9 days out of the Private Money Club launch. And I just want to know how many of you are joining us.
And while you're putting that in there, Mike, it is it's a specially designed whole life policy that our team specifically builds for you for this purpose. So if you'd like to learn more about that, Mike, just shoot me an email and I will, I'll send you over some resources and then we can schedule a call to talk about it.
So right here, 9 days, 4 hours, 40 minutes, and 8 seconds. You know what that clock is? Stressful. That's what that clock is. So we are launching something that we've been working on for 2 years that many of you are a part of, and we are going to, well, here, let me just show you what you're going to be part of. I'm Chris Naugle. Thanks for stopping by Private Money Club. This community is going to be the community that's going to change the way money works forever. And I'm going to give you a front row seat to something that only happens once a lifetime. We are going to change everything. October 14th. So make sure you register for this once in a lifetime opportunity where you watch how we change the way money works forever. All right, so I'm pretty serious about that on changing the way money works forever. I'd love to invite all of you that didn't say yes. Some of you kind of put question marks, not knowing what it is. All you do is you just go to privatemoneyclub.com and you just click the RSVP button right here. And when you click that, it's just going to ask for your name, your phone, your email, and that's it. And we're going to notify you about this. So the cool part is in today's world, unlike back in the Steve Jobs launches, you can be on your couch naked. Doesn't matter. And you're going to get to witness and watch this thing launch, which we've put a lot of painstaking effort. This entire team has doubled down on this thing. It's going to be pretty exciting. And I want to invite all of you because I truly believe that this site, maybe not now, but sometime in your near future can change the way your money game works for you and change the way your financial future works. So I'd love to invite you to see what it is and how it works. And what it is today might not be what it is in the future, because you know what? Bezos started Amazon by selling books online. And look at them go now. So if we start this by just providing a community for people with money and people that need money, where you can lend and be the bank and all that fun stuff, where does it stop? Cars, planes, trains, businesses? I don't know, but it's an exciting period of time. So there you go, text. So you can get in by just going to Private Money Club and enrolling there, or you can text PMC to 33777. Cost you nothing to be part of it. And I think it's going to be a ton of fun. So please join us for that. And Caleb, Stephen put his link up there just so you know. I just want to make sure you got that. It's a couple, just scroll up a little bit and you can see that. So that's what we got going on. TEDx talk, private money club launch, two probably of the biggest things in my career. And, I've got an awesome team that's been behind me on this whole thing who have, been kind of keeping things going, on the travels, promoting this and doing that. But it's really exciting to come back here for this. Probably will be one of my last wealth webinars before we launch, because I'll be out in Utah getting ready for the launch for the next wealth webinar. So I'm excited to be able to tell you firsthand what we're doing and how we're doing it. And I hope you guys can join us for that. Can I come to Atlanta? Sure. Just put a group of 25 people together in a room and I'll fly my butt down there and do a presentation for you. So always happy to do that. And that goes for any of you. If you have a RIA, if you have like a networking group of people that get together and you think that they would benefit from the infinite banking concept and what we do at the Money Multiplier with BYOB, just put a room of 25 people together and we'll fly out. We won't charge you anything. And we'll basically teach your audience and your folks how this whole thing works and how they can change their financial future. One of the things I thought was really interesting, and I'd like to get this audience's take on this, Elon Musk. Elon Musk came out and said now he's back on buying Twitter. Like, what do you all think about that? What do you think the reasoning is? Why do you think he wants to buy Twitter at his agreed upon price at 54 a share when Twitter's, where's it trading? Or is it 40 something? Steven, do you remember where it's trading this today?
Twitter's at like 51 right now.
Is it really? All right. So it bounced back up. All right. So, well, he's a smart guy. But I mean, why do you think he wants to buy that again? I mean, last he wasn't buying it and then they were going to sue him and go through a bunch of legal. And now all of a sudden he's buying it again. How many of you think it's because he doesn't want to go through the legal battle? Put I in the chat. Mark put he wants transparency and freedom of speech. That's a noble cause. And I want to believe that that's exactly why he's doing it. I believe he's truly tired of censorship of Twitter and wants to change it. I love that. Anyone else have any different views? Open platform. He plays his own games. Damn right he does. Sure does. Not many other people saying, I'm going to Mars. Huh, okay. Let me know when you get back. Lawyer fees. Yeah. Yeah. Doesn't want to spend the money on the legal. That could be an expensive battle right there. Anyone think that it was just part of the plan all along?
I don't know. It's pretty wild though. Market Watch just came out and said Elon Musk would lose 13.5 million Twitter followers if he scraps most of the spam accounts. Justin Bieber would lose 27.6 million. Britney Spears would lose the highest percentage of followers at 48%. So they're saying basically the 55 million of her followers are fake. Look crazy, man. But that was his whole point, is like, why am I'm paying for all these users and the data from them, which is the value of Twitter. But if they're all fake, then what am I really paying for? And that was like the big basis for him backing out, or the lawsuit. So, and it's still not, him saying this again doesn't mean it's a done deal by any means. So this could continue to go back and forth.
Leverage. He's a good negotiator. Yeah, there's so many different things. I don't have the answer. I don't know. I'm learning right now, and some of these points are really good. I mean, I think it's very unlikely that he doesn't have the money to fight the legal battle, and he's just the kind of guy that just likes to stir the pot. So I think he'd actually love fighting a legal battle like that.
Me too.
I don't know. It's interesting. It's interesting, and time's going to show, and time's going to tell what happens. But these are exciting times. They're stressful times. They're alarming times in a lot of levels, but just remember, and I say this all the time, in a world where there's so much negativity and so many people just want to hate, blame, and take, just remember that positivity will always reign true. I know this. I did an Insta story on this, and it's kind of like a lot of different things. If you fight things with positivity, the haters can't survive in that environment. Kind of like cancer can't survive in a body that doesn't have the things that cancer needs, like the sugar, and there's a lot of different kinds of cancer. So I'm not going to pretend to be an expert, but I've read enough about it. There's certain environments inside of the body that cancer can't live in. So if we can just take one from nature, and we live in a very hostile, divided, hate-ridden world, but if we just stay in a positive sense, we just stay in a positive mindset, and we just keep hitting negative with positive, it can't survive. It's like cancer. It just vanishes. It just disappears or goes back into its little hiding, because cancer's in all of us, but if it can't grow and it can't thrive because you put the right environment, or your environment is not conducive for cancer or can't survive. Well, make your life, make your mindset, make the world you live in, the people you hang out with, and the people you surround yourself with so positive that negativity can't exist in it. And it's hard. It's not easy, especially when it's your family, your friends that are the negative ones, but just try it. I've been experimenting a little bit because, with Private Money Club launch, we put, anyone see the orange post that we had up on Facebook? It just said, we're going to change the world of finance. Join us, save this date. Doesn't seem very harmful, does it? Save the date is just an orange, literally, that's it. Orange, had the date, save the date, text PMC to 33777. I got more hate on that post. I literally had to take the post down because the hate got me so riled. I tried staying positive. At first, I would hit them back with funny things and then joking things, and it just kept coming. And I don't know, I just had to remove myself from that negative environment. And sometimes in life, you can hit things as much as you want with positivity, but you just might be in the wrong environment, and you just got to change the environment that you're in and get to seek higher ground. But I just urge you all, because things are going to get worse before they get better. And if you live in that negative world, doesn't matter what we teach, doesn't matter what you learn, doesn't matter what you do. If you become negative, like, you're always going to be there. You're going to bring yourself down to their level. I got a lot to learn on this, but I'd love all of you to take that journey with me to positivity and just, listen to John Lennon's Imagine and some of the stuff like that, but just try to live in a positive environment and try to stay as positive as you can, and just take a little time, watch how the negative parts disappear. But then if you allow negativity back in, it's almost just like it's like a magnet. It just sucks it back in. So give it a shot. I'm experimenting with it, and I'd love for you all to experiment with it as well. And folks, if any of you are interested, make sure Monica is your first call that you book. If you're interested in the college planning, if you need any help with the infinite banking concept, please book us a call. Stephen, put your contact up there one more time. And again, I just ask all of you to join me October 14th for the biggest launch of my career so far. And I'd love for you all to be able to someday later talk to your kids and be like, I watched when they launched that. So with that being said, folks, really appreciate it. Also, if any of you wanted to be part of Private Money Club, make sure you sign up now, because after launch, it goes up to $14.97. So it's $9.97 now. And after the launch, every day it goes up $100 until it rests at $14.97. So not trying to do a shameless plug to sell, but hey, that's the only discount you're ever going to get on Private Money Club. And it's not a discount, it's just timing. You got to be in the right place at the right time, and you're there. So with that being said, folks, I will see you all soon. I hope you enjoy your day, and I can't wait to show you what we do in Farmingdale when the TEDx talk comes out. Thanks, everybody.
So I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button, actually smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.